Is the world on the brink of another economic crisis? Elon Musk, a renowned entrepreneur and visionary, has sent shockwaves through the financial world with his recent warnings of an impending recession. This video delves into Musk's predictions, examining the factors contributing to economic downturns and exploring strategies to mitigate potential damage. Join us as we navigate the uncertain landscape of the global economy and prepare for what lies ahead. Elon Musk's recent warnings about an impending economic crisis have raised concerns and sparked discussions about the state of the global economy. These warnings come when the world is still grappling with the aftermath of the COVID-19 pandemic, which has left a lasting impact on economies worldwide. Musk's concerns stem from a combination of factors plaguing global economies, including the instability of financial markets, escalating trade tensions, widespread unemployment, mounting national debt levels, limiting credit access, and the potential for a second wave of COVID-19 cases, triggering another recession. One significant factor contributing to the potential recession is the instability of financial markets. The pandemic has induced volatility and unpredictability, leading to significant fluctuations in stock markets. This volatility has made investors cautious and hesitant, reducing investments and economic confidence. The fear and uncertainty surrounding the markets can hinder economic growth and exacerbate the potential for a recession. The escalating trade tensions between the United States and China have also added to concerns. The trade war between these economic powerhouses, characterized by tariffs and disrupted supply chains, has dampened business sentiment and impeded trade flows. The ongoing tensions threaten global economic stability, potentially leading to reduced trade, decreased business investments, and decreased consumer spending. Furthermore, the widespread unemployment resulting from business closures and layoffs has severely affected the economy. Before the crisis, unemployment rates were at historic lows, but the situation has drastically changed. Millions of people worldwide have filed for unemployment, creating significant economic challenges. High unemployment rates can reduce consumer spending, further impacting businesses and economic growth. Mounting national debt levels in several countries and limited credit access are additional factors contributing to the concerns. Governments worldwide have implemented stimulus measures to support their economies during the pandemic, increasing debt levels. Limited credit access for certain nations facing a debt crisis adds to the complexity of the global economic landscape. These issues can have long-lasting effects on economic growth, inflation levels, and purchasing power for individuals and businesses. The possibility of a second wave of COVID-19 cases triggering another recession is a significant concern. As new virus variants emerge and vaccination efforts face challenges, there remains a risk of renewed lockdown measures and disruptions to economic activities. The impact of a potential second wave on already vulnerable economies could be severe, further exacerbating the risk of a recession. In light of these warnings, individuals and businesses must remain vigilant in managing their finances during this uncertain period. Building an emergency fund and reducing expenses can provide individuals financial stability and flexibility. Taking advantage of government support programs can also offer additional financial security. Businesses should focus on diversifying their customer base, exploring new markets, and adapting operations to changing circumstances. While Musk's warnings have garnered attention, it is important to consider various perspectives and consult various economic experts and analysts to comprehensively understand the situation. The global economy is interconnected, and any significant disruptions or challenges in one part of the world can have far-reaching effects. By staying informed and taking proactive measures, individuals and businesses can better navigate an economic crisis's potential risks and implications. The global economy faces many challenges that could lead to a severe economic crisis. The COVID-19 pandemic and subsequent business closures have resulted in widespread unemployment, particularly impacting small and medium-sized enterprises. Mass job losses create financial hardships for individuals and families and reduce consumer spending, further impeding economic recovery. This and mounting national debt levels pose significant concerns for governments worldwide. To combat the economic effects of the pandemic, governments have implemented extensive fiscal stimulus measures, resulting in a substantial increase in public debt. Servicing this debt could hinder government's ability to allocate funds to essential sectors such as healthcare, education, and infrastructure, stalling long-term economic development. Moreover, countries with limited access to credit face a rising debt crisis, making it difficult to secure loans and maintain debt sustainability. This can lead to recessionary pressures and prolonged financial instability within those nations. The threat of a second wave of COVID-19 cases also poses a significant risk to the global economy. A resurgence in infections may force countries to reinstate strict lockdown measures, again disrupting economic activity. The uncertainty surrounding the pandemic's trajectory can dampen consumer and investor confidence, resulting in reduced spending, lower business investments, and a contraction in economic output. The weakened purchasing power of individuals and businesses further exacerbates the economic challenges. As inflation continues to rise and unemployment remains high, people may find it increasingly difficult to meet their basic needs and sustain their desired standard of living. Businesses, especially smaller enterprises, heavily reliant on consumer spending, may struggle to survive as demand dwindles. This downward cycle of reduced purchasing power, declining business revenues, and overall economic stagnation can significantly prolong the recovery process and hinder efforts to restore financial stability. Given these potential consequences, individuals and businesses must take a proactive approach to financial management during this uncertain period. Building emergency funds becomes a critical step in cushioning against unforeseen financial shocks and ensuring stability during challenging times. By setting aside a portion of their income for emergencies, individuals can better navigate the difficulties of a recession and meet their essential needs without solely relying on credit or accumulating excessive debt. Furthermore, reducing discretionary spending becomes essential in optimizing available resources. Prioritizing essential expenses and cutting back on non-essential items allows individuals to stretch their limited funds and focus on the necessities. Adopting a frugal mindset and practicing mindful spending can help individuals safeguard their financial well-being and make the most of their available resources. Diversifying investments is another strategy that can aid in mitigating the impact of a recession. Relying solely on one type of investment or a particular sector can expose an individual's financial portfolio to unnecessary risk. By spreading investments across various asset classes, such as stocks, bonds, real estate, and commodities, individuals can reduce the vulnerability of their investments to the fluctuations of a single market and potentially achieve more stable returns. For businesses, exploring new opportunities and diversifying revenue streams can be crucial for survival during an economic downturn. Adapting to changing market conditions, identifying emerging trends, and exploring innovative business models can help enterprises remain resilient and navigate the challenging landscape. Additionally, businesses should consider adjusting their pricing strategies and targeting new customer segments to maximize revenue generation potential during a recession. Governments also play a pivotal role in mitigating the impact of a recession. Implementing sustainable fiscal policies that promote economic stability and growth is crucial. Furthermore, enhancing social safety nets, such as unemployment benefits and welfare programs, can provide a safety net for individuals and families facing financial hardships. Creating an environment conducive to economic recovery is equally important. Government should prioritize infrastructure investment, support innovation and entrepreneurship, and reduce bureaucratic barriers that impede business growth. By fostering a favorable business climate, governments can encourage investment, job creation, and overall economic resilience. One way to mitigate risk is by diversifying investments across different asset classes. Relying solely on stocks puts excessive pressure on a single sector for financial security. Diversification helps spread risk and provides access to different sources of income, making a portfolio more resilient to economic downturns. During recessions, widespread layoffs or corporate restructuring can occur. It is essential for individuals affected by these circumstances to be proactive in seeking new opportunities, whether within or outside their current company. Staying informed about changes in the industry, emerging trends, and new technologies can open up career growth options, even if current positions are eliminated. Preparing a business for a recession requires proactive measures as well. Setting aside reserves of money can ensure the continuity of operations during challenging times. Alleviating concerns about cash flow. Building strong customer relationships based on transparency and regular updates fosters trust and loyalty, enabling a business to weather tough times. Technological advancements can also play a significant role in helping businesses thrive during a recession. Automation streamlines processes, allowing companies to do more with fewer resources. Automated systems can enhance customer service, maintain relationships, and build loyalty, even in challenging circumstances. Additionally, leveraging artificial intelligence enables quicker and more accurate data analysis, facilitating informed decision-making during uncertain times. Elon Musk's warning and the current state of the world economy. Being proactive and preparing for what lies ahead is crucial. Investing in oneself and the future of personal finances is the best way to protect oneself and one's family during a potential downturn. Starting small, creating a budget, building an emergency fund, and increasing savings rates are essential steps. Additionally, investing in skills, staying creative, setting long-term goals, and working towards them with intention are all necessary processes that will be worth it in the long run. It is crucial to understand the factors that contribute to a recession and take proactive measures to mitigate its impact. By analyzing economic indicators, considering the global economy, and monitoring government policies, individuals and businesses can navigate through challenging times. Diversifying investments, exploring new career opportunities, fostering strong customer relationships, and leveraging technology are essential strategies for resilience. If you found this video helpful, please like, share, and subscribe to our channel for more valuable insights.